Welcome to Matters Financial and Geopolitical from a Frontier, and thank you for stopping by. Um, I was at the Serena this morning and I took this panoramic shot of the hotel early in the morning at about 6:30. It's like an oasis in the city, and even an aviary because they have these wonderful birds that you hear, this bird song. And it was a pleasure participating in a panel organized by Shelter Afrique regarding rental housing in sub-Saharan Africa. And it was interesting to see it. I can see it more from the financial markets point of view, but to see it from the practitioner point of view. I was on a panel with lots of interesting people. Yves Terrasse of the AFD, the CEO, the MD of Shelter Afrique, James Mugawa, W. Britt of the IFC, and Femi Adewale of Shelter Afrique, and also Miriam El Mawi, whose brother I know quite well, but this was the first time I met her. And lots of interesting points came out, I must say. I've been spending a lot of time at the BBC. The media demand signal is a fascinating thing, in fact, and obviously everyone's interested in the US-Africa summit. So I was there late last night at about 11, and then early this morning. And I thank the BBC's Dan Damon for the interview about President Obama and this more reinvigorated engagement that we're seeing. And then yesterday afternoon, I finally met Howard French, H.O. French, on Twitter, the writer, the author of China's Second Continent, which I read at one sitting over the weekend, a few weekends ago, and we'll be posting that once we've edited and uploaded that interview. But very interesting fellow, knowledgeable about Africa, about the United States and China. And I think that's a very interesting access of knowledge to have. My own thoughts. I'd like to thank His Excellency Johan Borgstam, who's the Swedish ambassador, for a very fine dinner. He's a bachelor and lives at the bottom of this road, and you're like deep in the forest. It's quite lovely, and he has a fantastic chef. The party was in honor of Bart Uvry, the Belgian ambassador, and Ragnar Gudmundsson, the IMF resident representative, both of whom are leaving this Friday. The chocolate terrine and the dessert wine were real outliers in what was an extraordinarily good dinner. Jorge Luis Borges, being with you and not being with you is the only way I have to measure time. Political reflections. I'll put up a photograph I saw of an Israeli Merkava tank rolling back from the Gaza Strip. I hope they can find some way to come to a ceasefire. It's really appalling. And then Global Research, which is an interesting website if you haven't come across it. And it's always sort of pretty much counter, is it called counterfactual? Or I don't know how to describe it. But anyway, they're saying the evidence is now conclusive. 2 Ukrainian government fighter jets shot down the Malaysian Airlines MH17. It was not a BUK surface-to-air missile. Here is all of that evidence which collectively convinces me that Hysenko's conclusion there is indeed the only one that can even possibly explain this wreckage. There have been 2 or 3 pieces of fuselage that have been really pockmarked with what almost looks like machine gun fire. Very, very strong machine gun fire. This remarkable statement comes not from Hysenko, but from one of the first OSCE investigators who arrived at the scene of the disaster. And actually, I think that is the most credible interpretation. Coming to the currency markets, the euro is back at 134, the figure. Dollar index 81.39, a little below highs seen last week, ahead of that employment number. Japanese yen 102.58, Swissy 0.9082, pound 168.84, Aussie 0.9339 has rallied 4.7% this year, India rupee 60.73, South Korean won 1029.64, Korean exports jumped 5.7% last month from a year earlier. Brazil real 225.88, Egyptian pound 715.11, and the South African rand 1063.10. Dollar index, I'll put up a 3-month chart. We still got to get above 82.50 to really get motoring, and I think near term we might have stalled. Euro versus dollar, I'll put up a 3-month chart of that as well. We're here at 134.04. I'll put up a photograph of a pedestrian passing an ATM outside a Banco Espírito Santo branch in Lisbon, Portugal. The Bank of Portugal unveiled a 4.9 billion euro bailout over the weekend that will leave shareholders and junior bondholders with losses while sparing senior creditors and unsecured depositors. Banco Espírito Santo, once the country's largest lender by market value, will be split in two, with depositors and healthy assets joining the newly formed Novo Bank, while bad loans and junior creditors stay with the old bank until it can be shut down. To regulators in Frankfurt and Brussels, this must have seemed the safest way to isolate any residual and tail risks related to the bank's Angolan unit and loans to other parts of the Espírito Santo group. Citigroup analysts, including Stefan Nedialkov, wrote in an email report from London today, the EU's tough approach in the case of the BES resolution is likely to be the law of the land. And clearly, it'll be interesting to see who absorbs the liabilities for the Angolan arm. Commodity markets, gold is at 1292.32. I'm looking for a move to 1250 actually. Crude oil, we've come back below 198.59 last. I think it's a buy here on a trading basis with a tight stop for a move back above 100. Sub-Saharan Africa, I wrote that piece, Africa goes to visit Barack Obama in Washington. This is hashtag Africa Summit, hashtag US Africa, hashtag US Africa Summit. And I was saying, that the White House has invited 50 African heads of state to Washington this week for the first summit between the US and Africa. And I was reiterating that there are plenty of summits, there's TCAD, the Japanese one, Chinese have had several. As many as 200 prominent US chief executives will be on the sidelines of the Washington summit, including the bosses of Walmart and General Electric. And I was referring to comments as long ago as last July from Ben Rhodes, who's to be followed on Twitter at Rhodes44. Interesting fellow, because he tends to give the president's view in an unfiltered manner. He is the Deputy National Security Advisor for Strategic Communications and Speech Writing. Anyway, he was confirming July last year that the US corporate sector was increasingly looking to hard charge into Africa. Frankly, this was the quote he put out last year, we have heard a high demand signal from the US private sector. What we hear from our businesses is that they want to get in the game in Africa. President Obama, of course, spent less than a day in Africa during the entire first term, and is evidently playing catch up. Being the first African American president of the US at a time when the US was seeking to emerge from a brutal recession, would have played very poorly back home if the president was seen to be cavorting on the African continent at that time. Therefore, during his first term, President Obama was in a political trap, not of his own making, with respect to the continent. I appreciate that Africa is a much better place in this new, more multilateral world. This new multilateral world is much more advantageous for the continent. It has injected some competition into the demand side of our equation. We need to be cognizant, however, of the hard power disequilibrium because it's intact. What I mean by that is the US hard power. And I refer you back to yesterday's tweet about what Hoyer Wolf and I were talking about controlling the sea lanes. And I said this disequilibrium is intact and set to stay intact for quite a while. With respect to ourselves, I sincerely wish we reset our relations. The rhetoric has veiled the reality. They bought 66% of our Eurobond, 50% of our inward remittances come from North America. Big counter-terrorism partner. On that note, GE, and talk about the demand signal, GE is set to invest $2 billion in Africa by 2018. They are saying that revenues exceeded $5.2 billion across 30 African countries in 2013. has won more than 8.3 billion in orders across Africa in the last 12 months, wants to invest $2 billion in facility development, skills training and sustainability initiatives across Africa by 2018. Interesting piece in The Independent. When will our politicians realize that Africa has changed? Aid is dead. Trade is the future. Ministers, and this is referring to the United Kingdom, love to talk of the global race, but with its blinkered aid fetish and self-harming visa policies, Britain is falling behind the pack when it comes to Africa. We will suffer for it. Now that even the United States is waking up to what is happening in this remarkable, vast and diverse continent, is it too much to hope that our political leaders might do the same? Angola, regarding the guarantee for the BES Angolan unit, they're revoking that in an overhaul. Angola's central bank on Monday announced extraordinary overhaul measures for the local unit of Portugal's Banco Espírito Santo, saying a sovereign guarantee of most of its loans would be revoked in the initial phase of process. Provisional administrators had been named to carry out the overhaul. National Bank of Angola said in a statement, citing the deteriorated state of the credit portfolio of Banco Espírito Santo Angola. The bank's assets would be assessed and could be sold off or restructured, it said. It is the biggest bank, well, it was, in Angola. South African all-share up 10.772% this year. I wrote a piece in April 2014 called Snapshots from South Africa and its role in Africa's economy. And essentially I was saying that, I was not as bearish about South Africa as some of the ratings agencies. I think it's trunking along at the bottom, but it's not going to get any worse. On that note, I'll put up a photograph of Kailani, which apparently was sold, I believe, to Porsche, I think, or BMW. And it's a super racetrack. We race these very fast cars around it. And I'll also put up a photograph of the sunset in Johannesburg. Dollar Rand, 10.6315. I think on balance, although we've been in this range for a long time, 10.30 to just below 11, that we head towards 10.30. Egyptian pound, 715.41. The Egyptian stock market is at a fresh more than 5-year high. It's up 31.495% this year. And as I said in January, if the equity markets had a vote in Egypt, Army Chief General Abdel Fattah al-Sisi would actually get one of those impossible to believe votes of 99.8%. Nigerian all shares up 1.142% in 2014. We've been drifting low of late. Amnesty have published some gruesome footage implicating the military in war crimes. That link is on Rich Wrap-Ups. It's horrifying. Ghana Stock Exchange is up 6.526% in 2014. Of course, Ghana is seeking to restore policy credibility by asking the IMF to help rescue its currency. Finance Minister Seth Turkper said. It's quite funny because on Friday I was on an interview with BBC. I said he's just got to pick up the phone to Madame Lagarde, because once the IMF step in, there's a force multiplier effect. They might put in $500 million, but it's worth like $4 billion in terms of how the market reacts. The government's plan to narrow the fiscal gap last year was too ambitious because of a shortfall in revenue, he said in an interview yesterday in Washington. We believe strongly that we are putting the right mechanisms into place. It is about the certainty of policy that comes with an IMF endorsement. The IMF is a force multiplier, and this is what was in fact required. Africa oil and gas industry will continue to grow. This is a report by PwC. Oil and gas industry has become one of the biggest sectors for mergers and acquisition activities in Africa. On average, transactions worth $1 billion occurred every 17 days in the oil and gas industry during 2013. Chris Bredenhan says large gas finds in Mozambique, Tanzania have caused the world to take note of East Africa as an emerging player in the global industry. Kenya, now this is interesting, is looking to cut local borrowing by half as they consider a samurai bond. Will reduce domestic borrowing by almost 50%. Government considers broadening its foreign debt portfolio with bonds denominated in yen and Sharia-compliant securities. This is the president. The state may cut the amount of debt it sells to local lenders by about 90 billion shillings, Kenyatta said. Government is increasing offshore borrowing after investors demanded 5 times the $2 billion it raised in its debut Eurobond in June. Our objective is to reduce our initial intended borrowing, which is about 190 billion shillings, and if we can reduce our exposure in the domestic market to about 100 billion. Those are the kinds of levels generally we're looking at this financial year. Falling borrowing costs prompted Kenya to tap global markets, rely less on local funding. Of course, we've got a weak economy. Visits fell 18% last year following attacks, including a deadly September raid by the Al-Qaeda-linked Al-Shabaab group on a Nairobi mall. Kenyatta couldn't confirm the exact level of the reduction in domestic borrowing or how much the nation would raise from international markets. And basically, I'd spoken about this previously. That lower rates was set to juice the economy and the stock market. That's why I was calling for a second half rally. In January 2014, I said we should see a good rally in interest rates and the economy can get juiced a little on lower interest rates. On that same day, I said, of course, there is our big Wembley Stadium moment with the Eurobond, which is now imminent. I inclined to the view that the Kenya government should slot the Eurobond market for the full $2 billion, which they did. This Eurobond issue will release the pressure cooker that is the domestic bond and interest rate markets. We should see a good rally in interest rates. Hopefully the banks will go for some volume and not just spread, and the economy can get juiced a little on lower interest rates. Then I wrote that piece, the Eurobond gets off to a fly on the 14th of July 2014. I said, returning to the Eurobond price action, this will surely be a catalyst for wrestling local interest rates lower. Spread between Government of Kenya dollar borrowing rates and Government of Kenya local currency rates is like an elastic band that is now stretched too far and will snap back by way of local Kenya shilling interest rates easing. And that was in July. KCB closed at a record yesterday and is trading at a fresh record today. It's up 18.5195% this year. If you haven't seen the earnings release, that link is on Rich Wrap-Ups as you scroll down. I also did an interview on that occasion with Joshua. Joshua was our guest previously at Mindspeak, and all those links are on Rich Wrap-Ups and on the front page of the website. The Nairobi All Share just shy of a record, up 12.4185% this year. NSE 20 up 0.5787% this year. I think we're now embarked on the second leg of the rally that I was predicting would happen, and I think that's going to be on lower interest rates as we are now seeing transpire. Thank you so much for stopping by.